In the Western Balkan region, EUG has so far successfully mobilized $140 million in private sector capital, benefiting over 2,000 regional SMEs. We take a great pride in our ability to drive important transformation in regional financial markets, introducing digital and non-traditional forms of debt financing, enhancing the equity financing ecosystem, and raising awareness among SMEs about new financing opportunities to foster their growth and competitiveness. To provide a little bit of context, the private equity market in the Western Balkans is still in its infancy, with limited investment options available. Currently, commercial banks are still the primary source of financial capital for SMEs in the region, offering traditional bank loans under stringent conditions, including a 2-year credit history and hard collateral requirements. Alternative sources of capital are still scarce, and this is one of the main reasons why EUG has played a key role in diversifying financing options for SMEs. Today, we delve into our journey to strengthen the equity industry in the region, discussing our achievements, challenges, and hopes and aspirations for the future. I'm delighted to introduce Sandra and Lazar, who will engage in a dynamic conversation about the establishment of a Western Balkan private equity fund, sharing insights on ideas, strategies, and progress made in recent years, from both investor and SMEs perspectives. Sandra is a senior finance expert leading EUG's efforts to expand financing options for regional SMEs, but also advocating for embedded lending and data-driven financing in Western Balkan economies. Lazar, EUG's partner in developing the private equity ecosystem, serves as the partner and director at Systema Capital Partners and is also a founding member of Capital Partners, an alternative investment fund management company established in Belgrade. He also invests in local SMEs. My name is Dragana Stanojević. I'm EUG's regional team leader, and I hope you have an engaging experience with us today. Before the start, two important technical information. I'm inviting you to submit your questions in the chat anytime. They will be addressed during the moderated question and answer sessions at the end of this webinar. The webinar will be recorded, and after the webinar, all of you will receive a link to the recording. That would be all from me. Thank you for your attention, and Sandra, the floor is yours.
Okay, thanks, Dragana, for introduction. Hi, Lazar. Thank you for joining us today, despite your busy schedule. But before diving into discussion on our joint experience in establishing the first local private equity fund in one, let's say, pretty much undeveloped financial market such as Western Balkan, let me just briefly follow up on Dragana's introduction so that our audience can even better understand our conversation. Namely, as Dragana already mentioned, equity financing is generally in very limited supply in Western Balkans market, and the local investment fund industry is significantly lacking development. But in the same time, the global economy is under pressure: inflation, the Russian invasion on Ukraine, the Middle East war, climate change, supply chain disruption, etc. And the Western Balkan banking sector, as a dominant provider of SMEs financing, become more risk-averse in lending to SMEs. So in financing of new projects, banks are requiring more equity participation. Related demand on the market, there is a demand for equity financing, but companies in the Western Balkans are often too small to attract, let's say, international private equity funds. They usually seek investments ranging for several €100,000 up to maximum of 1 or 2 million euros, which falls below the minimum investment requirement for foreign funds. So this gap clearly highlights let's say, the urgent needs for the establishment of private equity funds, specifically focusing on Western Balkans economies and with investment criteria adapted to local companies. And all of these are the reasons why EUG, together with partner from the private sector, whose representative Lazar is, launched the initiative to establish the first Western Balkan private equity fund. So, Lazar, could you now share with us the background and the reasoning from your side behind the idea to create the fund, and how do you perceive market potential?
Thank you, Sandra, and thank you, Dragana, as well for the introduction. It's really a pleasure to be here with you guys and discuss this topic, which I personally find quite fascinating. As you amply mentioned, a lot of companies here in Serbia are SME sized according to local sizing maps. So most of those companies have a revenue and a profitability that makes them quite small for foreign funds. So that's where we looked at as a team, and we noticed that there is a gap here to be found, which is that there's equity financing possible at those smaller ticket ranges. One of the reasons why that's attractive is because, as you said, the industry here, the financing sector, is overbanked and over-dependent on banks, which have pretty similar terms all among themselves and stringent conditions. Equity financing is something that's not readily available here. There are one or two initiatives, or you might get lucky and interest a personal friend of yours as an investor, but overall, there's not really an ecosystem of equity investors. When you couple that together with the fact that there is a sort of first generation of owners of companies, founders of companies that are reaching now about 65, 70 years of age, it's time for a certain transition to happen. All of these factors sort of put together really indicated to us that there is room to create a profitable equity fund, private equity fund, that will focus on these SMEs, provide them with either that transition capital, come in as an owner to change from the first generation to next generation of ownership, or even more interestingly, to sort of facilitate ambitious and good projects with equity financing where their balance sheet can't necessarily take new debt on as it is. Most economies, if you look at, SMEs comprise the bulk of the economy. And if you look at fund performance, the smaller the fund, usually the higher the performance they do in terms of returns. So all of these coupled together really gave us a strong push to attempt to create a private equity fund here in the region that will be focused on the region. Go ahead, Sandra.
Okay, now thanks. And now you can maybe briefly give us a brief overview of our journey so far, including some obstacles you have faced along the way and how you handled them.
So the idea was born out of sort of our work locally as financial advisors and investors ourselves. We've noticed that there is very little coverage of funds. You've mentioned it very well in your introduction, or I think maybe even Dragana. Most funds, there are some funds that cover this region. And they do cover this region together with the entire Eastern European region. So it's sort of more of an afterthought. But the tickets of investment that they look at minimally are usually higher double-digit million euros on the lower end and up to 100+ million on the higher end. So you realize that there's sort of a vacuum there. So that was the first thing we started doing, which is sort of to tailor a strategy that could meet the requirements of the local market, but also be commercially viable. Now you have to be careful that you have to choose several key factors. You have to choose the sectors you focus in on, the geography, the ticket size. Those are three key indicators that you pick on to know how to profile your investment strategy. We chose the Western Balkans, so non-EU countries in the Western Balkans, because even the EU countries in the Western Balkans do have an ecosystem available there. So there's the example of Croatia that has several funds existing. I think we can discuss them later because they're sort of a good example of how they develop that whole ecosystem and industry.
Okay,
but we decided to focus in on the non-EU countries because that's where no one is really looking at these opportunities, and there are plentiful. We quickly created a pipeline of companies. That being said, secondly, we looked at sectors. So you have funds that are sector focused. Let's say, for example, they only focus on tech, they only focus on industry. Given that the ecosystem here, the economy in the Western Balkans is pretty diverse, there's not enough depth in each sector to be focused on it. So we had to take more of a sector agnostic approach and say that we will look at every eligible industry. Of course, excluding things like prisons or weapons manufacturing, anything that's not applicable. But other than that, we would be quite broad in our approach. And thirdly, we had to choose a ticket size for investment that, like you said, fits the needs of the local economy, but at the same time is possible to generate an exit at the end of the investment horizon. If you go too small, you won't be able to generate an exit at the end of the life cycle of your investment. And if you go too big and make it easier to find an exit, you won't really have a strong impact on the local community and the local ecosystem. The next step in that hurdle was to build a team that could kind of drive that strategy and build it out. And that, I have to say, was the fun part of the job. So we looked at the people we worked with in the past, people who have direct M&A experience, but also private equity experience. And then we started building our team, ended up with the four of us working together. And lastly, we started sort of working on the hurdles of how to structure the fund legally and how to work on all of the technical documentation that go together in creating a fund.
Okay, and that's the part when EUG jump in to support you, right? Yes.
So exactly, what we were doing was very new to the whole environment here. Like I said, if you look at industry reports for private equity in general, or even more specifically, industry reports for private equity in Eastern Europe, all of Eastern Europe, 2 out of the 10 best transactions, meaning best returns, were done in Serbia, in the Western Balkans. So you know that there's real potential here among the SMEs that exist. Now you just have to tap into that. And that's actually when we were doing all of this work, preparing the teams, preparing the strategies, that's when we met with the team at EOG, and we just submitted a proposal and started working with the team to sort of structure it further and develop it further. And I have to say, it's been a big push that we've gotten from the team there, not just in terms of resources, but also in capacity. We fit very well with the other projects that EOG was doing. I believe you guys were also working heavily on pipeline creation. So you worked on educating a lot of the SMEs in this region on why equity investments are a tool that is, should be considered at all times. Maybe doesn't fit every opportunity, but should be considered. And that really helped us along the way. That education you performed among SMEs really helped us communicate with them better about something that otherwise wasn't readily available, which is open up your equity maybe for an investment or an equity-like investment. And go ahead.
Then we came up to the main challenge, and that was fundraising.
Yeah. So as you can imagine, to create a fund, you have to fundraise. It's in the name. And in that process, I have to say, we had a lot of help and a lot of support and a lot of patience from EOG. Initially, if you look at the landscape, so we tried to be efficient with our approach and see what other people are doing and replicate it as well here in the region. That's what we did with all of the terms of the fund, how it is structured. We looked at other funds, used the best practices. So how much fees do you charge? What is the lifetime of the fund and other things? But if you look at most funds in Europe, whether they're first-time funds, as we call emerging managers, or legacy funds, so meaning this is fund 2, 3, 4, 5, there's a common analogy among them all, which is there is an anchor investor. And
can you tell us now what is the anchor investor?
Gladly. An anchor investor is typically an investor that comes in early in the fundraising process and generates gives comfort to all future investors. So I'll give you a few examples. If you look at most new funds registered in Europe, most of them have the European Investment Fund as an anchor investor, because most people are reluctant to invest in a new fund team. So they would rather, it's much easier for them to write a check to fund number 5 of someone that has a track record. A new fund is very hard to launch. So then you usually have a intergovernment or international institution that comes in and plays the role of an anchor investor, which means they commit an investment after due diligence. And that signals to any other eligible investor, this has been checked, this is worth looking at, and they've already reached a certain size. So it's much less risky to work with them or engage with them. So sort of the anchor is what starts the whole process of fundraising and is sort of a necessary component in the creation of a fund industry, is to have those anchor investors ready and willing to participate.
And who are the main anchor investors in Europe? And maybe you can tell us something about the measures taken by government in Central and Eastern Europe to support private equity fund fundraising.
So there's two typical anchor investors. Usually that's the European Investment Fund. As implies by their name, they support funds, and they're the most, let's say, their mandate is defined, in fact, to support emerging managers in areas that are overlooked or not covered by typical funds. The second category are government-backed initiatives. So we can take the example of Croatia, as we mentioned before. Croatia's development bank created a program to serve as anchor investors for new funds. They did that together with the European Investment Fund. So they created a sort of fund of funds scheme where they can put out a call, make a selection of potential funds, and act as anchor investor in all of those funds or the ones that they selected and get the ball rolling in the fundraising process. So an anchor is sort of key, especially in regions like this one. Now, unfortunately for us, European
for us, is it like, for example, in Serbia, we have Innovation Fund. It's Serbian state institution and Serbian venture program. Namely, government of Serbia, with support of World Bank and EU Commission, designed the program to, incentivize private investors to invest in venture capital funds. The program provides, I think that, but correct me if I'm wrong, up to 5 million funding to locally established VC funds, matched with other investors' investments. But unfortunately, and thanks to that program, the first local VC funds has already established in Serbia. We anticipate the creation of at least 2 more funds by the end of the year. But unfortunately, for PE, funds lack such initiative, right?
Exactly. So that's a great example. The typical investor in private equity is the European Investment Fund, which does not invest in non-EU countries. So the entire region that we describe falls out of their scope. And there really isn't many other DFIs to step into that role other than them. Then the ball drops to governments. And the initiative that you mentioned, which is the Serbian Innovation Fund, the government entity, created such a scheme. Together with the World Bank and the European Commission, they provided a platform where venture capital funds, especially novel, emerging market, emerging managers, can apply, and they can get up to 5 million of an equity investment from the Serbian Innovation Fund. The beauty of that is that it catalyzes its movement. So for every dollar you raise, they match up to 5 million. So if you raise $1 million, they'll match it with another $1 million, all the way up to 5. Again, that signals to every other investor that the World Bank, the European Commission, and the Serbian government have found this endeavor to be worthy and have decided to support it. So they acted in that role of an anchor investor, and that's a great example where governments can have sort of a positive catalyzing effect. Now, if you remember at the very beginning, go ahead.
But sorry, there is no such initiative, not only in Serbia, but other Western Balkan countries, there is no such initiative, right?
Not for private equity. So private equity is the asset class we opted for because private equity supports the traditional industrial or manufacturing or service industries where most people are employed. So for every dollar spent in private equity, you usually generate 3 times the returns and double the headcount in invested companies. So we thought that it had a much more significant impact than venture capital could have, which usually focuses on more tech initiatives, which are much more scalable with the same number of people, or let's say the same structure. But you're right, there is no such initiative currently in any country in the Western Balkans. And that makes it incredibly hard to fundraise, as there is no, and not just the lack of anchor investor, but there's also a regulatory hurdle, which
wait. Can you maybe said now to share with us related anchor investors, what's something about your strategy is that you use to attract anchor investors, and maybe some experience during that process, so that somebody can learn something from that, especially
Absolutely.
having in mind the crisis. And
so we decided to look at who are the most typical investors. If you look at industry reports, who are the most common investors in private equity? First and foremost, you have the development finance institutions like the European Investment Fund, the World Bank, the IFC, International Finance Corporation, EBRD, the European Bank. And we started knocking on all of their doors and we started working closely with them. They all recognize that this region is lacking coverage in private equity, especially in the size of SMEs. And they were very keen on working with us. But their internal covenants make it hard for them to allot an investment in a first-time fund. So the message we got from most of them was, we love what you're doing, but come back at your next fund or at your second closing when you started investing, working with companies. Next, we looked at private sector investors that are typical in private equity. And those could be banks, pension funds, insurance companies, and typically high net worth individuals. And we started talking to the regional banks and insurance companies. But Sandra, as I think you know very well, or maybe even Dragana, I think you guys have worked on this. Financial institutions in Serbia, which is the largest market, cannot invest in alternative investment funds. No. They're barred from any investments in that region. So it makes it very hard to have them participate. In fact, it makes it impossible. And they are typically the first ones to move in. Since they're local, they know the market, they know the risks, they're already exposed, so it gives them sort of a reason to go in. That was the hurdle number 2. Thirdly, we started working with private investors looking to kind of catalyze their interest in the asset class. And we got somewhere. We have to say we've gotten a few investors interested and we got some results working with them. But on the whole, all of them were hoping to see some more significant institutions step up first, and then they can make the conversation with them much easier. And with the lack of that sort of anchor role, it became almost, in our experience, impossible to sort of raise and close a fund in the foreseeable future. And like you mentioned, if you look at the next funds that will be generated in Serbia or in the Western Balkans, let's say the next 3 funds, all of them had an anchor investor in the form of government or international institution, notably the VC funds that you mentioned.
Yes, and I must admit that one of the key lessons we have learned is that during these polycrisis times that have become the new normal, in a financial market that is not fully developed, donors must take a comprehensive approach when they choose to support the creation and implementation of a brand new financial product. In terms of today's topic, this would entail providing significant support to the government to establish an environment and infrastructure that fosters the growth of private equity from the industry. That includes regulation that you just mentioned. But okay, can you tell me what lessons have you learned and in your opinion, what can donors do to support the development of inclusive, let's say, environment of PE funds and equity financing? So
I think that the process we went through, if it can be communicated to other prospective teams that want to create, so if let's say another such program like EOG sets up, using the experience that we've passed, so what kind of regulatory structures are acceptable among funds, what kind of strategies are more preferable for investors, what kind of investor classes to target, who to communicate with, you can shorten the path for people by at least 1.5 years by providing them some of the experiences, some of the processes we've gone through in the initial phase, where you have to sort of in the dark to find the doors. By giving them access to this kind of information, like we're doing on this webinar, you really can help them move along much faster initially. So we've learned quite a bit in terms of structuring, in terms of legal compliance, and in terms of what kind of time horizons to expect, and most importantly, what kind of investors to talk to. So what kind of investors have the highest likelihood. But I think at the crux of it all, donor organizations have to focus on working with either act themselves as anchor investors. I believe there's a new fund that's being set up in Serbia based on a USAID investment this year or last year, or either to act the role of investor or to play the role of facilitator together with the government to enable that ecosystem to thrive. If you look at the trajectory of most funds, Fund 1 needs an anchor investor. Fund 2 is much easier to launch. Fund 3 goes on and on. And,
but Lazar, Sorry. But with all of these, I think that it's important to highlight that even though the Western Balkan private equity fund hasn't established yet, and EUG entering the closing out phase, you will continue to work on our joint initiative, right?
Absolutely. If you remember when we talked about structuring, one of the biggest dividends of this project with EOG that we've done is the establishment of a alternative investment fund management company. So that is a novel law, which I even think USAID participated in creating. Sandra, you can correct me if I'm wrong, or Dragana, which allows the creation of alternative investment fund management companies. In order to create an investment fund, you have to have a fund management company that is duly licensed by the Commission, Securities and Exchange Commission locally. And
yeah, we got licensed right last year. And under that company, we brought together a highly skilled group of professionals under a single company that will manage not only future Western Balkan private equity fund, but also several other funds. And this approach reduces operational costs and provides a strong incentive to the market. And now I can leave you to make the exclusive announcement that America.
Exactly that. We've spent a lot of time working on that infrastructure, and we've created and got a fully licensed fund management company that can now create sub funds of various categories and types. And like you said, I'm very glad to announce that we've brought together a great team of people in different asset classes. So my team, we're trying to cover private equity. There's Vladimir's team that covers venture capital. There's another team that covers real estate investments. We work together to sort of create an economy of scale. No single fund has to be mega large to cover its costs, because we have several teams together. We can create sort of several smaller funds and get the ball rolling. And Sandra, you're right. I'm really glad to announce that under the umbrella of this fund management company that we've created with the help of EOG, the first fund is going to be launched in the upcoming quarter, which is called Omorica Venture Capital, which is a VC fund that got support from that Innovation Fund of Serbia, and falls under the structure that was created by EOG together with our teams. So go ahead, Sandra.
No. And we also plan to produce some report outlining the strategy to raise additional domestic funds for the Omorica fund. So cross fingers.
Omorica has done an amazing job. Go ahead, Dragana.
No, there was just one question that maybe we said we will answer the questions at the end, but this one relates to what the government of Serbia did to help. So I thought maybe we can ask it now. And it is in the Serbian example. Does the government of Serbia sit on the cap table of the fund as an LP, or is there a different arrangement?
So related to Omorica, who has an investment from there is the Serbian Innovation Fund itself, which has received funding from the European Commission and the World Bank, and also various kind of other support. They're one of the investors in the actual fund. So every fund has, if you will, to simplify, A-class investors and B-class investors. A-class investors are the managers of the fund. They're the ones that make the investment decisions. They're the ones that manage the operations of the fund. That's technically the fund management company. And then you have the investors in the specific fund itself, which in that case would be the Innovation Fund of Serbia, together with the institutions that back it, any other investors. So they do take an equity position in the specific fund, but they don't take an equity position in the fund management company that makes the decisions and deliberations. So that, I hope that answers your question, but if not, please feel free to follow up, and I'm happy to work more on.
But again, in related innovation fund, we're talking about support to venture capital funds. And the problem is that there is no similar initiative to support private equity funds.
There isn't. There are government institutions that could play this role. So for example, there is the Development Fund of Serbia that is focused on SMEs, but it itself doesn't have any program of supporting private equity as an asset class. So there is ways to do it. I think in Macedonia, there's a similar entity as well that could be the vehicle to support the asset class of private equity. But in Serbia or in the region, there is none as of today. And that seems like an enormous opportunity for donor organizations to work with governments and then catalyze that effect substantially. So just think of America as a good example in venture capital. They've got their investment by the state will be doubled, so it will be matched, and any subsequent fund is the result of that first investment. So it sort of has a really strong catalytic effect down the road.
Okay, Dragana, do you received any more questions?
Yes, there is a discussion actually, but I would like to hear Lazar's comment. There is a comment which states that private equity doesn't really work for traditional SMEs, even if they are dynamic, because one, very often they are family owned and don't want to sell equity, and two, there is rarely a feasible exit for the private equity.
Yeah.
So, and then there is another one also saying equity is not always the right tool for SMEs, per David's comment above, regarding growth, exit potential, ownership incentives, etc. So, any comment to these comments, Lazar?
Sure. I'll go through them because I even see one that I think is a great one by Anastasia. So if you look at 99% of SMEs, they are family owned, and every single one of the SMEs that we've highlighted in our pipeline are family owned. The team at EOG has supported sort of pipeline creation and awareness raising events, which have brought together SMEs that are privately owned, family owned, that wanted to create this exit. And I have to say, there were plentiful opportunities. First of all, because there is a change of generation. The first generation creator of the company cannot continue the company, and his kids won't continue the company or don't have an ambition to. An exit in that case is a very good idea through a private equity fund. So we found, at least in the pipeline over the last 2 years, at least 30 plus opportunities that we've shortlisted. So not all together 30, but 30 that we've shortlisted then shortlisted again to 10 that we would really like to follow up on. So that showed that there is a lot of SMEs that would like to work with the PE fund. I love your pushback on the exit. If you look at transactions in Eastern Europe, they're not enormous. They're in the single digit million, closer to 10. After 10, you have much more opportunity for exits. Those are not only other PE funds, but those are mid-sized European companies that are looking to have a footprint in the Western Balkans. Number one, for new market expansion, and number two, for availability of labor. So the exit opportunities were not impossible to find. They're just obviously more rare than what you would think when you think of traditional PE funds. And all of that is sort of cohesive with the ecosystem. You don't really have a lot of $100 million transactions or IPOs in this region, but you do have plenty of single-digit million transactions, or up to 10 and 15 as well. So in that regard, you have to be very careful. If you're looking to do tickets of below a million or single-digit million, those have to be sort of equity-backed investments, meaning sort of debt investments with an equity collateral. But if they're going to be pure equity investments, you have to be careful of what are the transactions that you can generate for an exit. So you have to look at both factors, but there is a way to balance them well. And I think that Izvini, go ahead.
No, continue.
I think that the question that equity is not always the right tool for SMEs, I think is definitely true, but SMEs need to have the opportunity between equity and debt. If you only provide them with a debt tool that looks at only their balance sheet, that makes it very difficult for a lot of the SMEs to develop cohesively. Equity does not just come with money, it also comes with a partner. So you do get a partner in your equity that develops you further. There's a great example of a company in Serbia that had a EBITDA, or if you will, profitability of just a couple $100,000 that got an investment from an equity fund, and they partnered with the owner, helped them open new markets, helped his expansion plans, and the exit that they had last year was the turnover of the company was at that time about $140 million. So the equity investor not just provided capital initially, but provided them a roadmap to grow and develop onwards. So there are good examples of where equity can be the right tool, but obviously no tool is good for everyone.
Okay, please, Sandra.
No, I just saw that somebody mentioned my favorite topic, DFC, that DFC can provide first loss capital to equity funds and so on. Yes, it would it would have a significant effect if USAID managed to coordinate their assistance in this region with the support from DFC. DFC ability to invest in equity would play a catalytic role in mobilizing private sector capital, but as far as I know, we are too small as a market for DFC. But if that's changed, yes, I agree. DFC would be a great partner.
Yeah, we've worked closely with the DFC to look at opportunities. Unfortunately, I think that their first loss guarantee would be a great tool, and the DFC has used it in the past as a tool for something like this, but it wasn't really, they didn't really commit to work using it in the Western Balkans. To my knowledge, as of last week, the DFC did announce an investment in a fund that looks at the Western Balkans, but it was an infrastructure fund that has raised about 500 million in assets, and their ticket was 40 million. So that is very specific for infrastructure, in this case, green infrastructure. And then, yes, you can make those larger tickets. But I think that if the DFC would either scale down their tickets, which, to be fair, they've been very open and they told us that their equity team is very new. So it takes time for them as well to get a grasp on things. But it is an intention of theirs to try and cover this region more. But I think that the first loss guarantee tool could be very well catalyzed for early funds. And that could be a great way maybe for a donor organization like USAID and DFC to give real support to the Serbian government or any government-tied institution to generate the ecosystem or the anchor investor role. But I see more questions. I'm trying to keep up with them. If there's anything you'd like me specific to go through.
So maybe it's easier. Maybe it's easier for me. I think that Sri Lanka's experience matches our experience with the DFC. They said that they reached to them, but the DFC was not ready yet. But the question was also, is this whole approach something that could be replicated with other CATALYZE buy-ins working with SME and equity? So I know that you're not part of other CATALYZE buy-ins, Lazar, but in terms of just how easy is to replicate some of the things, what would be your comment?
I got dropped out for a few minutes, so do you mind repeating your question if you don't mind?
Okay, no, I don't mind. The question was only how easy it would be to replicate what we were doing here in other environments and other countries, shortly.
So it would be quite easy because what we're talking about is very international. So the structure of funds is common everywhere, whether that in fund in the US, the Midwest, in the UK, or throughout the Western Balkans, the fund structure can be well replicated throughout. And the fund structure is a great solution to pool capital together and then sort of allocate it for a certain strategy. So I think that it can be. And I saw that there's the EOG project also covers Sri Lanka. And I think that this would be very well replicable in Sri Lanka, especially since you mentioned in the introduction that I invest in companies from time to time. I'm an investor in a Sri Lankan restaurant here in Belgrade, together with at least 3 or 4 other Sri Lankan nationals and high net worth individuals from Sri Lanka. And they all confirmed that they would love to see private equity funds in Sri Lanka being locally created and much more active. So yes, I think that this example could be very well replicated over time, especially in regions where access to finance is challenging.
And you're also all welcome to Belgrade and visiting a Sri Lanka restaurant that Lazar is part of. There is another question. Here it comes. Appreciate the point made that when you launch a new financial instrument, you need to take a broad approach to an enabling environment. I'm curious, what would be on your wish list of enabling environment activities you think donors should be funding? And then under parentheses, we have a buying mechanism for innovation that includes blended finance, and we can design more flexible activities than many of the current finance-related mechanisms. So I'm always curious about ways we can complement other activities, USAID Innovative Design, Execution and Acceleration Services project. That was long, but the main question is what should donors help happen in business environments in order to make new financing more approachable and used by SMEs.
So given that the topic is private equity and alternative funds, I'll stick to that as an access to finance solution. I think that USAID does have in its toolbook tools that can be applied here. And notably, I think that USAID has a EDGE. I don't remember what the EDGE stands for. It's an acronym, but it's called the EDGE Fund, where they can work with private sector investments to catalyze and make investments in private sector initiatives that are sort of innovative or interesting and so on. So I think there is a toolbox that USAID does have to kind of either, again, work number one as the investor or the anchor or the first mover in a new fund, or number two, facilitate together with governments to create an infrastructure where they can access finance. Doesn't have to be governments, it could be other DFIs. I mean, I would be wonderful if the DFC could provide first loss guarantee to another DFI to act as an anchor investor. If DFC itself cannot invest such small tickets, maybe they can push other institutions that do cover this region to work as well. So I think that there's my wish list would either for donor organizations to act as anchor investor or to facilitate government or other institutions to be that anchor investor. And I think that would be great. And like I said, sorry, Dragana, go ahead.
No, just two things. One is I think that one of our guests offered to speak to the DFC piece from the USAID point of view. So I don't know if we have, hello, Mr. Matt Negrelli. I just don't know if we have that as an option. So I'm referring to Signy and who's helping us with technical things. And then meanwhile, there's a question, is CATALYZE looking for additional family office investors?
So CATALYZE or EOG helped us attend several events where family offices gathered together to discuss potential fund investments. And we were, I was actually at one of those in Vienna. I was at give a speech at a panel, part of a panel on discussing emerging markets. So we've done as much outreach as we can to family offices. And just for context, if people don't know, family offices are formal vehicles for wealthy families to channel all of their investment activity through. And we've gotten one or two of them interested in the region, but unfortunately not enough for us to meet that threshold where we can sort of have enough assets under management that it makes sense to incorporate. But I agree, family offices are more flexible in terms of where they invest and how they invest, but they also very much echoed the answers we've gotten from institutional investors, which is get it started, and then we'd gladly hop on later on.
I think that now we can hear Mr. Matt Negrelli that
thanks so much. Yeah, appreciate it. So just to chime in real quick, I don't want to take too much of your time here. So thanks, Lazar, for your background. So my name is Matt Negrelli. I work on the Development Finance Partnership Unit. I know that's a mouthful. We used to be the DFC support team. So we interface very extensively with DFC, including their Office of Equity and Investment Funds. I hear you loud and clear. We are always in discussions with DFC, sort of encouraging them to be, as developmentally oriented as possible. We've been, frankly, quite encouraged recently with some of the funds that they have elected to support recently with like you said, their very new equity tool. I think it's always going to be like a conversation because they have that commercial return expectation, right, as a DFI. Like we're the donor, we get to focus exclusively on that. They don't have sort of as much flexibility because of that commercial return expectation, but we can work with them nevertheless to push them in that direction. I think we are always, so another thing I wanted to bring up was we're beginning like regular conversations with that team to sort of like share a pipeline, right? And to like imagine how we can work together on funds from time to time, because we can play different roles, right? Like we can play that more catalytic, early, I hate to say first loss, sometimes first loss role, sometimes more like operational support role, sometimes like technical assistance role, as you've seen with CATALYZE. So it's a relationship that's evolving, certainly. I think we're seeing like a lot of real positive signs. To ask, DFIs in general to like play a first loss role, like they can come in and take risky positions, right? But it's tough for DFIs, not just DFC, to come in with like truly like pure concessional capital. So it's just, I'll just say it to conclude that we're always in conversations with DFC to help them envision more catalytic positions and to help them be more developmentally oriented. So thanks so much for bringing that up.
I would say that you're absolutely right. You can definitely feel the desire of DFC to cover this region and have a positive impact. Two of their team members were in Belgrade not too long ago, and they invited me for coffee, and they very openly asked me very similar questions to what you did. If I had a wish list, what would that wish list be, so they can see what works in this region, what could work in this region. And like you aptly said, it is a novel tool, the equity tool for the DFC. So that's something they're sort of developing as they go, I think, and also building confidence, not just internally in where to deploy, but also vis-a-vis their stakeholders, that they have the prerequisite skills to deploy it. I do think that there is, to put it as bluntly as I can, I think that without developed institutions stepping up to play that role and meet that gap, naturally the ecosystem itself might not do it in any time soon. So I think that there should be sort of a role that development institutions play. Now, it is a wide landscape when you say development institutions, but I look at it as sort of an opportunity. If there was a combination of USAID or DFC or any other, I'd say acronym or DFI, that had the right tools and the right skill set and the design and the mandate to cover this region, something like a first loss tool, something like an investment matching tool or anything like that would go a very, very long way, especially if you look at like a 5-year horizon time. You would not only create the first wave of funds, but within 5 years, you would create the second generations of those same funds over time. So I think that is definitely, I mean, I'm biased, but I think it's a worthwhile mission to consider.
Thank you, Matt, for joining our conversation. And now I would just like to bring us closer to the conclusions. We have a little bit time left. So yes, to what Lazar already mentioned, USAID did support in Serbia the development of the regulatory framework for alternative investment funds, and it is quite helpful. But during the USAID EUG, one of the main victories we had was the establishment of the Alternative Financing Management Fund company. And maybe, Lazar, you would like to first you and then Sandra provide the main 3 things that or 2 or as many as you wish, that you are proud with on what we succeeded together, and also some hopes and plans for the future.
So I really have to be grateful for what EOG has done in this region and through this project. I come from pure private sector engagement. Every work that I've done was for a private sector organization. We've done advisory work for acquisitions. And I have to say that I had a lot of pressure put on myself by myself that everything had to go smoothly. And I felt very heavy-hearted whenever we hit a hurdle to update the EOG team. And the response that I would get would be, let's work together and find a way how to work around that. Whether that was fundraising, whether that was regulatory, whether that was just sort of the hurdles of the project itself. So I have to say that that was my first time working with a donor institution. And I have to say that that role you guys play, beyond just and I see you guys in this presentation exceeded your goals. There is also a positive goal in the fact that my experience was so positive that I go around telling people they should look into more working with USAID and projects IEOG that Palladium did, because it just is a really good environment to sort of stimulate new ideas or something that's riskier that might not work on its own. So I really feel grateful for that. the creation of that fund management company is an enormous thing that I think will sort of have a legacy in the next years to come, especially as I think that my team, we will eventually succeed in creating an equity fund. Morica has already succeeded and they're starting investing. I think this year they've even lined up a couple investments, just waiting to get through the final regulatory hurdles. So I think that there's real benefits to what you guys have done. If I had to sum up this trajectory, I would say we tried to leap 4 steps ahead where we were compared to where the ecosystem was. We tried to leap to full completion of a project. And I think what resulted was we walked 2 or 3 steps up instead of just leaping. So right now we have the foundation made to scale this up with the fund management company, with the experiences that we've gone through. And I'm really glad to be part of this webinar because it gives a chance to share that experience, which I hope was useful to the people listening. And then maybe any next initiative, whether that's ours or anybody else's, will sort of be faster and more impactful over time. So big thank you to everybody who's participated in the project, especially the team at Palladium here. We have with Sandra and Dragan, and working with them closely was really, really, really great. And their wider team as well, Ignacio especially. So thank you guys very much for that. And I think that this story is yet to be told as we go on in the next cycle in the next years.
I think, Dragana, that this was such a great closure, so I wouldn't spoil it with anything.
Okay, then thank you everyone for all of the questions. And there were some also questions on can we continue some of the conversations after the webinar. You will receive all of our contact information, and please feel free to reach to us. We will be happy to talk to you, and we will be happy to answer any of the additional questions you may have. So with this, I think we can close the seminar. Thank